Welcome to It's No Secret, a podcast for those who want their money questions answered.
Join us as we talk to real Kiwis and share truths about our own financial lives, because the truth is, there is no secret to achieving financial freedom. Lovely listeners, welcome back to another episode of It's No Secret. I'm Kat, and today we're bringing you another money Q&A episode to chat about a hot requested topic from listeners, unit pricing and how units in a fund work. And joining me today, I have Aaron, who is part of our portfolio management and investment ops team here at Kernel. So Aaron, welcome.
Hello.
Here to dig in with me on all the kind of, I guess, back-end things that potentially people aren't super familiar with when it comes to a fund. And to really set the scene, the reason why people ask about this is because Kernel funds are unlisted, right? And a lot of people, when it comes to, say, index investing or passive investing, might be pretty familiar with like an ETF, like Vanguard. And so they're usually across kind of how an ETF shares information and trades because it's listed on a stock exchange. And then, of course, customers of Kernel and listeners of the show tend to get a little bit more confused when it comes to a fund, because a fund structure works differently and how you're investing your money into a fund also works differently. So Aaron, to kind of start on, I guess, the just bare bones, what are units in a fund? Like, how would you describe unitization in a fund?
Yeah, so units are the fundamental, I guess, building blocks of a fund. It represents a shareholding in a fund. Mm-hmm. It is similar to like shares of a company, which is an analogy that I'll probably use a couple of times, but just to be clear, it is very different to a company.
Sure.
And contrary to popular belief, it is also very different to an ETF as well.
Yep.
But essentially, like a unit is designed to sort of track and preserve the value of your investment.
Sure.
Because constantly every day there are investors going in and out of the fund, and so the value of the total value of a fund will change every day based on both market movement and other investors coming in and out. And so a unit is able to sort of track what the value of your particular investment is.
Yep.
So I should also probably mention that the unit price is largely only affected by the performance of the investments in the fund.
Sure.
However, it's probably good to mention swing pricing, where if another investor decides to withdraw a very large amount of money from the fund, it could impact every other investor. And in that case, we would look to charge that investor to compensate for everyone else, because you don't want to lose money on your investment just because someone else in the fund wants to pull out.
Yep.
But yeah, essentially it's just to represent like your value.
Yeah. Because then I guess how that practically works, right, is people obviously invest in like dollar terms. So if they say, okay, well, I want to invest $10,000 in the global 100, to your point, they need a way, or, you know, a registry needs a way within a fund to track how much you own, because when you buy in, you're buying in at $10,000, but that $10,000 value is going to change over time. And so essentially that $10,000 is being converted into a number of units, and then you own X number of units. And then would it be fair to say that you should then potentially care a little bit more about how many units you own in a fund, because it's really the total number of units that ultimately is going to determine how much that growth in your investment is making? Does that make sense? As opposed to necessarily solely focusing on the dollar value?
Well, obviously everyone's going to only look and care about your dollar value.
Yeah.
And when it comes to the number of units, the number itself, I think this will something we'll get into a bit later, but the number itself doesn't really matter because of how a unit price is calculated.
Yeah.
But essentially, if you were to track your number of units, if you're increasing your number of units, then it's sort of indicating that you're investing more and more often.
Right.
But the actual number relatively has no significance.
Yeah. Okay, cool. So on that point, I guess at a starting point, because some people might think, okay, well, if there's units in the fund, is there like a finite number? Or how does that work? How does the fund expand over time?
So each time someone applies or puts an
Invests.
application into the fund, they will be issued units, similar to how a company issues new stock.
Yep.
However, this is happening every day. And on the same boat, if people are redeeming, if they're withdrawing out of the fund, then they are redeeming the units.
Sure.
And essentially, in investment ops, we only care about the net. So we only care about the difference between the incoming and the outcoming. Because
Every
essentially, if someone is applying into the fund and someone is redeeming a unit each, let's say, then you can essentially see it as that unit is being sold from this investor to the incoming investor.
Yeah. Which is not super dissimilar to how it's done with shares in a company.
Yeah, pretty much.
Yeah.
Pretty much.
Yeah. Okay, so then I guess we obviously know how many units we have in a particular fund, and we know the value, and units therefore need to have a unit price. And I think people get really hung up on focusing on a unit price because they're quite used to tracking share price, right, with a company. And it's because, shares are listed, it's really easy to get some real-time feedback on how that company is performing and really kind of, I guess, fixating on the fact that share price is a proxy, for better or worse, for value of that investment or value of that company. So how does this translate to unit price? Like, is unit price representative of the value you own in the fund? How does the unit price change? How is it sorted out? How is it created? How is it determined?
Yep. So unit price is tricky because it is, I guess, easy to attribute that to the performance of your investment.
Yep.
So if the unit price goes up, then it's showing that your investment has gone up because, let's say you hold 100 units. If each unit is now worth more, those 100 units will be worth more. However, there are a few stipulations as to why unit price probably won't be the best indicator. So I would probably want to start off with just explaining how, if you were to place an order, like a completely new order, what unit price you would get and how that's derived. So when it comes to unit pricing, it is always the end of the day. End of day, EOD, as we call it. That is the most stable valuation point because for most of the day when the market is closed, it will always take the previous closing value of a stock or a security, and the index is also taking end of day prices. And also for our multi-currency funds, like our global funds, there are several exchanges across the world all closing at different times.
Sure.
And so
to pick a consistent time, if they were all open, would be weird, whereas it makes more sense, you're saying, to just pick the closing time.
You just pick the closing price.
It's a consistent time.
And that also means that with foreign currency, the foreign currency market is constantly open. It essentially never closes. So we pick a fixed rate called the 4 p.m. London fix. So when London turns 4 p.m., whatever the world market rate is at that, I think the one we follow is from Reuters.
Okay.
That is how we value our FX. And essentially, when it comes to a fund's portfolio, once all the markets are closed, with the US market being the last one to close, we will essentially value all the investments in the fund. And so we will get an ending value for the total fund. And then we also have the number of units outstanding. And this is before the new orders. So if I were to place an order on Tuesday, then the unit price for Tuesday would need to be calculated first before my new units are issued.
Go into the fund.
Because we need to know how much it's going to cost me per unit.
Right.
And so we would take the total value of the fund at the end of the day once everything is priced, and then you would divide that by the number of units outstanding, and that would get you the value of one unit. And so that unit price should essentially reflect what the market movement was on that day. And then the new order that I would have placed will be processed at that price.
Okay, cool. And I think it's important to note, because you did obviously mention, but for all of our index funds, we obviously, well, you guys, I shouldn't say we because I'm absolutely not involved in this, Aaron, but the investment ops team are obviously targeting to mirror the performance of the index. Like that's basically what we're promising to our customers, right? So the index also takes end of day market close prices. And so that's a really core part of how I guess we're operating as a fund to ensure that we can also match the index performance as closely as possible.
Yeah.
I guess with that comes like a timing nuance, right? Because to your example of say then how a company works, this is a little bit different because if we continue with your example of, I place an order on a Tuesday, I then won't know necessarily how many units I've bought in a fund until would it be the Wednesday or the Thursday? And the reason for that timing is because of the calculation needing to be based on end of day.
Yes. So if you were applying for an order, you can essentially trust that the value of that order you'll be placed will be the value
of whatever dollar you've invested.
Value you put in.
Yep.
It's just the number of units will change based on what the unit price will be.
Yes.
However, when you're redeeming from a fund, it's different because you can only at the moment withdraw a certain number of units.
Yes.
And the stipulation with that is if you were to withdraw the total value of your investment, you won't know what that value is going to be at the end of the day that you're placing the order.
Yep.
So we would need to have that unit price calculated.
Yes.
And then whatever number of units you specified you want to withdraw, that would be basically the value that you would be withdrawing.
Yep.
And so if it's your entire investment, then it's going to be all your units. And so we would need to know how much those are worth at the end of that day.
And that's quite a different behavioural change, right? Because I think some people like potentially listed investments like shares or ETFs because you can place an order on market and essentially lock in the price at that exact moment of time that you place that order and have a very known outcome. Whereas that level of control is not available within an unlisted fund for the exact reasons that you've talked through. But we feel that that's a fair trade-off because there's lots of other benefits that unlisted funds and this kind of unitized fund structure provide, kind of tax being one of them and operational efficiency for the work that you and the team do being some of the others. And ultimately, I think as well, we talk about if this is a long-term investment, if there's a slight variation at the end of the 20-year period that you've been investing based on what the unit price is, like
it's insignificant.
Yeah, exactly. In immaterial to your overall outcome. So can you talk a little bit more then, I guess, Aaron, in terms of so today is a Thursday, what kind of unit price would I be able to see today? It's obviously there's always going to be a little bit of a lag time in terms of seeing historical unit prices. Should I really be caring about that as an investor? Okay. How would you explain that to people?
So the platform will only ever show the last published unit price. And so right now, if I were to open up my phone and check it, so today is Thursday, I would be seeing Tuesday's unit price.
Yep.
That is because we have not finished pricing for yesterday, which is Wednesday.
Yep.
We can only start processing that after the US market closes for Wednesday.
Which would have been this morning.
Which would have been about an hour ago.
Yeah.
And so the US...
And the team can't work that fast. Eh?
No,
they can't price over $1 billion of funds within an hour.
I wish, but I definitely believe that, with operational efficiency, the quicker it's done, the better it is. People want to be able to see their order updated. People want to be able to see... Just to know that their order has been processed and that their money has gone exactly where they think it's
Which is kind of good news because as with like tech enhancements and other things, it's only going to get faster, I imagine, from here in terms of that operational efficiency as opposed to like getting slower.
We often achieve pricing T+1, which means the day after the day in question. So on a typical day, we would see yesterday's pricing finished late this afternoon. However, at the most, it'll be T+2. I think our service level agreement is that it's within 2 days. So unless there are any anomalous delays that we would notify all customers of, the displayed unit price should never be more than 2 days old. And then at the same time, when the unit price is updated, you would be able to see the new orders placed in, and then if you have a redemption, you'll need to wait 1 extra day for that money to actually reach you.
Yep.
And that is because of if you were withdrawing money out of a fund,
Yep.
and if that were to require us to sell some assets or sell some investments, typically settlements for that in terms of when we receive the cash for it is T+2.
Yep.
Recently, the US and Canada have sped things up with their new tech, and they actually settle things T+1. But I believe at the moment, most of the rest of the world is still T+2. So just to ensure that the cash is all settled and we're not essentially giving away money that we don't, or giving back money that we don't physically, not physically, I guess, actually have. That's why redemptions take an extra day.
Yeah. Do you know what the T stands for? Is it trading, like trading +2? I feel like I should know that. Tim might have to fact check this part of the podcast because I was like,
it might be trading. I mean,
I was just like, I've never actually bothered to think about what the T is in like T+1, T+2.
I mean, to me, I think it's scientifically it'd be T for time, but then at the same time, yeah.
But I guess, it's the day you place the trade +2 or 1 business day, right?
Yeah.
Or plus a number of business days. Okay, cool. So going to hit you with a tricky one because this, I think, always confuses people, and it's something that we've talked about before in terms of, obviously we recently did a deep dive into distributions versus dividends, and a lot of questions came off the back of that as well because distributions obviously work differently within a fund structure compared to dividends from companies. Oftentimes or always, the unit price goes down after a distribution is paid out of a fund, Aaron. So could you just quickly talk us through the mechanics of that and why that is?
Yes. So this is one of the reasons why, alluding back to a previous point, why unit price is not always not a great indicator for performance. So how much have you guys sort of covered in terms of the dividend to distribution?
We've covered a pretty, I would say, like a fairly extensive amount, particularly around the fact that distributions are basically a moment in time where the fund is paying out a pool of money that's usually been invested within the fund already. So basically saying that, that's a moment in time where the investment operations team have deemed that, a number of the underlying companies have paid or, been through, say, a dividend season, and there's a reasonable amount of like income within the fund that can then be paid back out. We have also covered that perhaps during that time, the income that was received from the dividends in the underlying companies has potentially already been reinvested into the fund. So that's why we also talk about distributions being not only income, but sometimes capital, because the capital component is the part that is being redeemed from the fund, which is basically income that had previously been invested.
Yes.
So,
yes. So that's spot on. However, I would also want to mention that is for equity funds.
Yep.
When it comes to the fixed income funds, it's a little bit different because when it comes to those funds, the return is mostly interest income and not a capital gain or dividends as when you invest in companies. So, so yes, like dividends, a distribution is a return. It's like a payment of money that's meant to sort of represent income. However, obviously we have the different distribution methods. We have reinvest and we have cash.
Yep.
So at the moment we pay distributions quarterly, and the distribution that you're receiving is indeed a return of the capital, and it is indeed supposed to represent the income that the fund has gained since the last distribution.
Sure.
And the reason why it goes down is because that is essentially money from your investments that's given back to you. That's being taken out of the fund. So now the fund is now worth less.
Yep.
However, if you have your distribution method set to reinvest, then that money essentially merry-go-rounds back into the fund, and you receive extra units to compensate that dip in unit price.
Yep.
If you have it set to cash, then you will receive that in cash.
Yeah. And we've talked about that in the past of thinking about like the fund operating a balance sheet like a company, right? And it's like the fund had all of the assets, and let's say it had some cash there and it's paid that cash out as a distribution. So naturally that balance sheet has reduced because it's paid the cash out.
Yes.
But you as the end investor are in the same position because you owned units and now you own units and some cash. But the combined total of both of those is the same position.
It should essentially be the same. And with the fixed income funds, in particular, Cash Plus, I think is the outlier.
Yeah.
The reason why you see that dip so much significantly more, or in fact, actually, I think for like equity funds, it's sort of almost 50-50. If the performance of the fund on distribution day exceeds what the distribution is paid out, then the unit price won't drop. It kind of gets washed in.
Yeah.
But for Cash Plus, almost all of the return on that fund is due to interest income.
Right.
The capital gains in that fund is usually very, very little.
Yeah.
And so because of that, over the quarter, almost all of that return that fund has gained is income. So that will be all distributed out. And if you're a reinvest customer, then you just get more units. Or you'll get that in cash.
Yep. Okay, cool. That makes a lot of sense. One thing that I love, and before I ask the question of like unit prices being too high and whether or not that's even a thing, might just go back to the very start of a fund and I guess the inception of a unit price, because people perhaps assume that like, I don't know, a unit price starts at 1, or how does that work? So what's your insights on that, Aaron? How is a unit price determined, and when a fund starts, what's the number?
So the starting unit price for a fund is largely arbitrary. You can choose whatever you want.
It's like kind of a marketing exercise, maybe.
Sure. I think
if the ops team did marketing.
Usually it's like a nice number, like a 1 or 5 or 10.
Yep.
It's kind of pointless doing 100.
Yes.
Because it's just an extra 0 added onto a 10. It's like,
Love it. Which also brings to me the question that often people ask us, which is like, they try and compare unit prices between funds, but also again miss the point that perhaps there's been a completely arbitrary starting point between each of them that are different, right? Like Global 100 maybe started at 10, whereas Moonshot started at 1.
Yeah. Yeah,
so you can't look between funds as a proxy.
The starting value is sort of arbitrary. If you wanted to compare unit prices between funds, you'd have the only thing you should care about is the relative change in unit price.
Sure.
However, still stipulating that is not largely the best sort of indicator for performance. Due to distributions. Yeah. Amongst other things.
Yeah. Okay, cool. So if the starting value is pretty arbitrary, how do I know if a unit price is too high? Common customer question. Should I wait for the unit price to get lower?
Yeah, so no, unit prices, well, I at least believe unit prices should not be viewed in that way. Yep. So there is a way to create a series of unit prices that does take distributions and fees into account. However, that's more for just internal use. The unit price when it comes to entering and exiting a fund won't match the performance of the fund itself or the matching index due to distributions. Yeah. And so how do you know it's too high? Well, you don't really have a reference point to say it's too high. What you could say that if you were tracking a fund's unit price over a month's period, you could say that if you saw over the month the unit price hiked up, you could make an inference that it's high and you may not want to buy at that time. However, this is where I want to plug my favorite thing when it comes to investing is called dollar cost averaging. Yes. Because that essentially means you don't need to care about if it's too high or if it's too or however it moves because you're going to take advantage of all the dips. You can set and forget it using the auto invest feature. And also at the same time, like if you were to hold off on investing because you think it's too high and then some time passes, hindsight is a wonderful thing, but it's also a dangerous thing. You could have made the wrong decision and you could kick yourself for it. And, that sucks. Like when I first started getting into investing, I partook in the whole GameStop thing that happened.
Tell us more, Aaron.
So that... this was when I was studying finance and I was in uni, and I bought in relatively low and then it spiked up and then I was like, I need to cash out now. So I was like, should I wait or should I do it? And I kind of got worried, so I withdrew. Yeah. However, I saw afterwards that if I had waited a day, I would have made twice the amount of gain. But then also realizing that if I had waited 3 days, I would have lost most of it. So
Right.
it's sort of like
Yep.
you don't want to, thinking about it can be very stressful.
Yep.
It can.
Yep.
And at the same time, if you are sort of watching a unit price day to day, most of the time the differences are quite insignificant, especially when we're sort of thinking about investing for the long term. Right?
Yeah, absolutely. And your inference in making a call like the unit price is too high is that you're then also inadvertently saying that you don't believe it can get any higher, and you don't know that, right? Like that's the whole thing. There's no guarantee of that. No one can predict the future. And so you kind of need to question your own logic, which is like, well, if I'm assuming that it's too high, I'm also making some assumptions about what I believe it's going to be, 6 months from now, a month from now, 2 years from now. And really, do I have the knowledge and foresight to be able to do that? We obviously would say no.
Yeah, I feel like what we've just talked about mostly applies to the equity funds.
Yeah.
The general assumption is, and it's sort of been proven through history, that stocks increase over time over the long-term period.
If you believe in capitalism, it's going to be worth more in 10 years than it is today. Yeah.
I will also say that if sort of, if you don't want to invest small amounts regularly and you are set on sort of wanting to time a lump sum, unit price would not be the place to look. You'd want to maybe look at like the index or
long-term
the actual
returns.
Yeah, you want to look at it. And if you I just want to disclaim that it's all going to be speculative unless you're a psychic. You will never be able to predict what's actually going to happen. But if you want to sort of make a prediction, or want to, for example, if you saw over the last year that a particular index performed really, really well, and then you had the position that is going to dip over the next year, then you could wait and you could invest at a lower amount. But then once again, that is not guaranteed.
Yep.
And even in a time scale of 1 year compared to, let's say an investment horizon of 20, 30 or 40 years, it's likely not going to largely affect
your outcome. Yeah. Awesome. Nice. Cool. So, global funds can be a bit tricky. We've talked a little bit about Global 100. We also love talking about Global 100 because we know that it's a fan favorite. How many currencies are in the Global 100, roughly, Aaron?
Well,
So I'm putting you on the spot here.
I think it's kind of lower. It's about 6 or 7.
Okay.
But
And
it's mostly US
is there
dominated.
7 developed markets that we're trading in that fund, roughly?
I would not be able to tell you the exact number, but it's about 6 or 7.
Yeah. Okay. So if we then think about, I guess, the actual functionality from an operations point of view of that fund, and then how all those various markets close, and then like the currency trade point and all that kind of stuff. So kind of let's use that as the example. If today it's pre-12 o'clock, it's a Thursday, I'm placing, $100,000 order into the Global 100, when would I expect that money's actually kind of invested throughout the world globally? And when would I see my unit pricing show up on the dashboard?
So let's say you placed a $100,000 order now.
Yep.
So that would mean you've placed it because it's currently before 12, it will be placed for pricing date 13th of February.
Okay.
And I want to make that clear that the 13 is the important part.
Sure.
We may live in different time zones, different parts in the world, but the day that money will be invested into that particular exchange or market will be the 13th of February for that exchange.
Yep.
Unless the exchange is closed, which then we wouldn't be able to trade in that market. And then, so for pricing date on the 13th of February, when we invest into the New Zealand market, it is easy because it's currently open as of now.
Sure.
And essentially our trades will be at the closing price at about 4 p.m., 5 p.m. As for the other markets that open and close later to us, because New Zealand, out of all the developed markets, is the earliest. Essentially, it's like a sort of staggered timetable where I think it will be Asia and then Europe, and then the US is always last.
Okay.
And so because the US is last, and at the moment with the current daylight savings across the world, it is 10 a.m. for us, which means that any orders that are or any trade orders that are to be placed on a US exchange will only execute 10 a.m. tomorrow. Because that's going to be the close of the 13th of February for the
For the
US. Yeah.
Right.
And then after that's all closed, it will, like we said before, it'll take a little bit of time for us to reconcile, to process, to ensure that all the investments are sound, that nothing's gone wrong.
Yep.
And then once that all happens, we can calculate a unit price. And then once that unit price is calculated before it's published, we then can issue the new units of that $100,000 order that you place today.
Yep.
And then we can also process the redemptions for other outgoing investors.
Sure.
And then you would most likely expect to see on your dashboard that things are updated around about, or to be safe, after 5 p.m.
Yep. On the 14th.
On the 14th. And then the latest would be by the end of day of the 14th. If something, were to delay us. And then if there was like a very serious delay, then we would let everyone know that this has happened and that we might have to take an extra day. However, in my 2 years at Kernel, I don't believe that has ever happened yet.
Yeah. Exactly. And I think to your point of, our kind of standard operating procedures at the moment say that we run on a T+2 timing for unit pricing, but I also know, I think from memory, since we've been on T+2 and daily trading, we've only missed T+1 once.
Yes. Yeah.
So,
I mean, it's good to we want to do it as quickly as we can.
However, it's being done as fast as humanly possible, but there are obviously humans involved and lots of markets and huge amount of data points and pieces of information. So to your point, it's like we need time.
But the main thing is that because in most of our global, for all of our global funds, most of that fund is invested in the US. It takes up most of our investments. And because of that, we're always going to have to wait for the US to close, and that's always going to be the next day for us. However, when we want to talk about like a valuation date, it's always going to be the same number date.
Yes. Same date.
It's actually quite convenient that we're the
first, not the last.
Well, it's quite. It makes it easier from an operational perspective because we get to do everything while everything is closed. And then even though Australia opens partway through our day, Singapore and Hong Kong will open while we're still working, because we only care about the closing price.
Yes.
We essentially, we're not chasing the only time sensitive one is the New Zealand market, of course, because we can't post orders after everyone stopped working.
Yes. Yeah, exactly. Fair enough. Love that. Love this little peek behind the scenes. I have a wee suspicion that this episode might incite a few other questions from listeners and customers about what else the operations team do, because I think, if you like to nerd out on some of this stuff, it is quite interesting and it's different, right?
Well, it's at least interesting to me. I don't know if it'll be to everyone.
Well, and it's a different behavior. And I think, there's a lot of high trust when you are a customer investing in a fund, right? Because when you are just buying your own shares on the share market, ultimately you're the person doing that in the most part, on a trading platform. And so it is quite helpful, I think, to understand who are the people involved in making sure that, my 100,000 into Global 100 gets into Global 100 in the way that I want. And what does that kind of look like? And understanding that there's time involved. It's not instantaneous. We would make it faster if we could, but we can't control time zones.
I think I should also mention that it's not actually us that does the unit pricing itself. It's our custodian. And so there is a lot of sort of cross communication that needs to go on there.
And good, multiple sets of eyes, right? Yes. Because it's, one of their core jobs as custodian is to ensure that unit pricing is correct, because it is important.
If it's not done correctly, that can cause a lot of problems, and that often will take time. But so that's why it's really important for us to have a good working relationship with our custodian, make sure our communication lines are great. And it ultimately means that if something does go wrong, right, if you have a good working relationship, then it's just that much easier to solve it. So
absolutely. Yeah. Perfect. Awesome. Well, thank you, Aaron, for joining us today.
Thank you for having me.
Appreciate a bit of a look behind the curtain on ops life. Big thanks to Kernel for enabling us to do what we do. Don't forget to hit like and subscribe wherever you're tuning in, whether that's video on YouTube or listening on Spotify or Apple Podcasts. If you have any questions, feel free to get in touch at It's No Secret NZ. Send us episode requests, feedback and more. Would love to hear some comments on this episode, and if there's anything else you'd like to hear from the ops team. See you next week.